Raymond James upgrading Homebuilders, Toll Brothers, Lennar, KB Home to outperform from market perform. It's on strong August housing data, with shares of these three builders up between 20 and 65% so far this year. The firm admits it is chasing stocks here after initially missing the rally, but says there is still likely more room to run. Does anybody fundamentally disagree with this call, which appears to be a little bit late on the cycle?
I definitely don't disagree, and we've actually
I don't disagree.
So therefore, I agree that there is potential upside still left in home builders, and that's something we've been talking about since the beginning of the summer, and the home builders have performed. I think there's a few reasons for that. First of all, when we look at inventory levels that are actually above averages for existing homes, so therefore we could use some new home inventory. Credit is actually easing up both for consumers as well as home builders. We've got affordability, which has improved drastically given the almost 1% drop in mortgage rates. And also, by the way, this is a domestic sector. So with the U.S.-China trade headwinds, it definitely benefits from that as well. So we expect home starts actually to grow about 6% next year, which is higher than we were expecting before.
I think a fair question is, do you have concern where rates were this time last year, where rates are today, and any sort of a lift in rates once again? You saw with the latest mortgage application figures what that did, contracting them 10%. So for me, yes, there potentially is limited upside, but these names have seen such a significant benefit from the fall in mortgage rates over the last 12 months. Yeah. Incredibly dramatic.
But I guess my beef with the call is not the call itself. It's just that basketing these all as the same company, Stephen. I mean, Toll Brothers tends to be very high end. Their geographic footprints are different. The price points are often different. Can you just lump them in like that?
I think you can, given everything you just said, because those dynamics that drive them. So, look, I missed the whole cycle in these. I'm not getting involved now because I'd feel twice as dumb if rates backed up and if they came down. So, look, I don't fault the analyst for doing it. He's getting in front of what he says is going to be a great quarter for those companies, and that's fine, but that's just not what I'm going to do.
I think a lot of the macro trends, though, are slower moving, and to some degree, they're kind of just turning positive. So single-family purchases moved positive in August, I believe, for the first time in a year. So this is, I think, probably the beginning. And even if you do have
you just wonder, Megan. I mean, we saw this, and I'm not comparing 07 and now, but you got to a point where people stayed out of the market for years. They finally just gave up and said, okay, prices are out of control, but I got to buy a house because I'm sick of missing it. And they bought right at the top.
Right. No, that's
right, because for 2 or 3 years, they're like, it has to come down, and it never came down.
The housing market is totally different than where it was in 2007, and I think that on many of the metrics, we are not even back to where we were. And so I think there is room to run, and we don't see mortgage rates moving materially higher, even if rates do go a little bit higher.